if the country is seen as a faster reforming country, the FDI can improve dramatically. People who are wanting to take longer term bets, they will be encouraged to take those bets, and that creates a positive cycle. FDI comes in, long term investment happens, jobs get created. So all those are mitigating factors too.
Mr. Bhanshali, but what about the market reaction? At 18 times forward, do you think the market has already begun to price in the positives from GST, or do you think because it's a long gestation, reform which is going to get a good 2 years till when it actually reflects into the real economy, the market also is going to take its own sweet time to try and price in the GST benefits?
In the market, everything eventually gets reduced to earnings growth. And until the earnings cycle picks up, everything else can have only limited impact on the market. And market is being wise about it. It's not getting carried away. And the GST kind of got discounted over the last 7-10 days because it did look like happening this time. So the market is fine.
Just wondering, now the next goalpost seems to be not trying to figure out really, but working with the GST rate. If it is not at the 18%, which I think most people perceive it to be right now, and slightly higher, will that be a negative, or do you think it's a small blip in an otherwise really large positive reform?
It's not even a blip. When we're talking of rates coming down from 27, 28% or even 22%, and more than that, huge amount of administrative ease of doing business and so on, 18, 19 is not even a debate.
So, do you think we can digest and we can, we can take a 21, 22% kind of a rate, Mr. Bhanshali?
They are talking about a range of 17 to 19. So, I don't know where do we get 21, 22. But you see, it is not about just the rate. It's also about simplification that, you will have one rate. 51% of the products are not even covered by GST. So there are many, many aspects to this. And I think those aspects are a lot more important than just the rate itself. Obviously, there is consensus that if we keep the rate very high, it doesn't serve the purpose. So I hope so, that all will work together to keep the rates as low as possible, whether that is 17, 18 or 19, one really has to see.
So what's the market view, Mr. Bhanshali, from here? You say that, partially the benefits of GST are already there on the ticker and in the price. Do you think the markets would now get into a patch of consolidation, so to speak, which already has begun playing out?
Market, the Indian story is a very dynamic one. So I don't think that any one particular event marks a completion of a major leg. So, UP elections are coming, so there will be political issues. But the monsoon has been very good, and how does it translate into demand, one is to see. Commodity prices are behaving in a more stable manner, and what does that do? So the banking reform is going on, and, how does that play out? So there are many, many stories. So the market will continue to remain engaged with current developments. So I think the market is doing fine, reacting to what it needs to react. I don't think the market is done one way or the other.
Okay. Mr. Bhanshali, for an outsider, do you think more than an earnings re-rating, this is more like a P re-rating moment? Because frankly, Indian equities are trading at a premium to other emerging market equities. But when such mega reforms, they actually become a reality, it is a moment where investors, both local and global, they would be happy to pay that extra premium.
I think, some of that premium got built in when Mr. Modi, came in. And therefore, GST is kind of a lagging reform that was expected. And that's kind of now on the cards. Therefore, I would not want to think that this is a P re-rating moment at this point of time. However, if the consensus that we saw in the parliament, if that consensus becomes an abiding feature, then indeed it is a P re-rating moment. So this parliament has been very productive, or this session has been very productive. Several bills have got done. So I think if that can continue, that indeed to me would be P re-rating moment.
Mr. Bhanshali, one more follow-up right now. I mean, the need of the hour is really to kickstart the capex cycle and kickstart the investment cycle. Now, since GST would be implemented in next 12 to 18 months, there would be this teething problem. There would be this implementation issue. And till the time the real big picture is not out, Mr. Bhansali, do you think somewhere capex actually could take a hit? Everyone would wait for the new tax law before they commit to the capex?
I think over the next 2-3 months, as the council gets formed and deliberations start happening, people will have a fair idea of the range of regulation that can be expected. So if the demand is there, the businessman does not really, they will take chances and go ahead. We have seen them take much, much bigger chances with regulation and governance because the demand was in their face. So I think if the demand emerges, they would think there's enough clarity on GST front. You don't really have to wait for, all T's to be crossed and I's to be dotted.
Mr. Bhansali, a lot of people right now think that we're almost touching new highs. Are we reaching the top? My question to you is, what would your advice be to somebody who's looking at making investments right now? If you have a really long-term view, is this a good enough point to even start again with a 5-10-year view? Because a lot of things that are happening are internal in nature. I mean, tax reforms, DII investing, SIP starting. Do you think this is the start of a really long cycle in the markets?
So practically speaking, I'm sorry to say, but this question is rather theoretical. If you are a long-term investor and who want to get started, they get started anyways.
Okay,
and it is
sure.
not in the nature of the market, but it is in the kind of stocks that you pick. So if you're picking stocks that have a 10-year story, that's visible, people will buy, definitely.
Find us on Facebook at facebook.com/ETNow and don't forget to click the like button. You can also follow us on Twitter at ETNowLive. To stay updated with all our programming, hit the subscribe button on our YouTube channel by logging on to youtube.com/user/ETNow.